Snowflake is a hypergrowth business that's put investors on a roller coaster ride since it came public. So far, this company has not been a good investment. But could that change? And what does this company do? We'll tell you everything you need to know about this business in about 5 minutes. My name is Brian Feroldi.
And my name is Brian Stoffel.
Thanks to StockCard.io for sponsoring today's video.
And Brian, Snowflake is a $61 billion company that trades under the ticker symbol SNOW.
Snowflake's mission statement is to enable every organization to be data driven. That's simple, inspirational, and optional. This company understands mission statements.
But what does the company do? Snowflake has a platform that simply focuses on big data.
Snowflake's cloud based software enables its customers to gather, store, analyze, and share data regardless of its origin.
Now, it's important to note that Snowflake works with instead of against the big cloud providers. So you can use AWS or Azure or Google Cloud. It doesn't matter. It'll work with Snowflake.
Now that's really attractive because enterprises don't necessarily going to have their data tied to just one business. So by choosing to work with Snowflake, you're not tied down to just any one cloud provider. You can use all three at the same time depending on your needs. Now in truth, Snowflake is actually a really complex business to fully wrap your head around. There's a link in the video description that takes you to a video that showcases exactly what Snowflake does.
Now, it's important to point out that Snowflake is not a software as a service company. It's more of a platform as a service company, and it has a usage based model. So I might pay a certain amount at the beginning of a period, and every time I run an inquiry, I have to pay for that. Because of this, and because it's so popular and useful, the dollar based net retention as of the most recent quarter was 178%. Existing customers spending 78% more every year. That's incredible.
Now, Snowflake is still in the blitzscaling mode and is rapidly adding costs to its income statement. Because of that, its customer acquisition costs are currently sky high.
There is no doubt that so far, this is a recession proof business model. This is a tool that businesses use to make sense of the data that they have.
And given the nature of the company's business model, the vast majority of revenue is recurring in nature.
So let's talk about the company's moat. I give them credit for the network effect for two reasons. One, if you have your data on Snowflake's platform and you want to share it with someone, you can do that seamlessly, but they have to be on the platform as well. Second, the company's AI and machine learning plays an important role in running these queries, and the more data that they analyze, the better those tools get.
Second, there's a strong case to be made that once you start using Snowflake's platform, it's very hard to get off of it, as evidenced by that 178% dollar based net revenue retention rate.
Now, I gave the company a small bit of credit for low cost production, and that's because Snowflake is willing to take on all of your data and store it for free. It will only charge you when you start using the tools to analyze the data. Now, if you're an upstart company looking to challenge Snowflake, that would be a difficult barrier to jump over. So while it's not a huge moat against bigger rivals, it is against smaller upstarts.
There's also an argument that the brand name Snowflake is starting to resonate with enterprises around the globe.
And now I just talked about low cost production against upstarts, but against the large cloud titans, there is a counter positioning moat as well. Amazon, Azure, Google Cloud, they might come up with their own tools that do the same thing as Snowflake, but because Snowflake is agnostic, customers are more likely to flock to that service.
And finally, this company is rapidly adding on new customers to its platform, and there's no doubt in our mind that this company's moat is expanding rapidly.
All right, let's look at the company's financials. When you look at revenue, there's a lot to like. It's basically doubled every year for the past 3 years.
The company's gross margin over the past year is about 62%. However, this figure is rising rapidly and is expected to continue doing so.
Now, when we look at net income, a yellow flag might rise, and that's because losses on a GAAP basis have not only negative, but they've been expanding over time.
However, if you look at free cash flow, the company recently became free cash flow positive.
When we look at this company's balance sheet, they have an enormous war chest of $5.1 billion and zero long term debt.
But because the company's net income is currently negative, so are the returns on capital.
Snowflake's two co founders are still involved in the company and have important positions as the president of products and chief technology officer.
But they handed off the CEO job to an accomplished executive named Frank Slootman a few years ago.
And as you can see, as a team led by Slootman, the company gets great reviews on Glassdoor.com, with Slootman earning a 93% approval rating.
And while this is a sizable business, insiders still own about 11% of the company, which is worth $7 billion at current prices.
So, what does the future look like for the company? Well, one thing we're sure of is the addressable market for this data warehousing is growing exponentially. But the company is also creating more products that can be used on this data over time. That's not enormous optionality, but it's not insignificant either.
When it comes to operating leverage, Snowflake has tons. This company should be able to drastically improve all of its margins as it continues to expand.
The addressable market is about 90 billion today. We think it'll be much bigger in the future, and Snowflake has only captured about 1%.
Meanwhile, all of Snowflake's growth so far has been organic.
Now, if you're a shareholder of Snowflake, you know this well. The company stock has been wildly volatile. Currently, it is losing to the market by a wide margin since going public last year.
On the bright side, the company has already established a pattern of beating Wall Street's estimates each time it reports earnings.
And unsurprisingly, given where it is in its growth stage, Snowflake is not focused on returning cash to shareholders currently.
Turning to risks, there's a bunch to keep in mind. First and foremost is competition. The company has a frenemy relationship of sorts with AWS, Microsoft Azure, and Google, and it would be a mistake to overlook the competition completely.
It's also worth noting that in the 1 year since it's been public, shareholders have been diluted thanks to stock based compensation.
Aside from that, the number one risk facing investors today is this company's extreme valuation. While revenue growth has been very high and the stock has gone nowhere, shares are currently trading for more than 50 times sales and 80 times gross profit. So investors are really paying a premium today to get their hands on this hypergrowth business.
So, what should shareholders look for moving forward? Well, one of the most important metrics to watch is that dollar based net retention. Now, look, we don't expect it to stay above 175% forever, but if it can stay above even 140% for the next couple of quarters and years, that would be enormously positive.
Second, keep an eye on remaining performance obligations. This number is even more important than sales, and we want to see this number's hypergrowth continue.
Finally, as we mentioned, Snowflake is spending a lot of money to acquire customers. However, that spending as a percentage of revenue is coming down. If it continues to come down, which it should, net income should change directions and swing up markedly.
How did this company score on our investing checklist? The answer there is pretty good on mine, which is especially impressive considering that this stock has lost to the market and is nowhere close to producing net income. It got a 77 when I ran it through my score, which is very, very good.
And since my framework doesn't concern itself with those things as much, it scored even better on mine, an 11 and a half, which is knocking on the door of being anti-fragile.
All right, we made our public call, so it's time to head on over to stockcard.io to hold ourselves accountable. We're in the anti-fragile portfolio. I'm going to place a new order. The ticker symbol is SNOW. We're going to do a buy decision. Today's date is Monday, March 7th. This is a $200 stock, so we're going to buy 5 shares. The score was 11.5. Now I'm going to head on over to my quality checklist, and I'm going to do the exact same thing.
Now, while Brian's doing this, we want to remind people that you can enter the Beat the Bryans contest that we started earlier this year, where we each picked 5 stocks that we thought would do well in 2022. We've so far had 520 people participating in this contest, and you can join at any time.
There you have it. Snowflake is a high growth business that's also trading at a nosebleed valuation. Will this stock deliver rewards to investors? Just going to have to wait to find out. Brian's out.